It's Friday. It's Friday.
I
Come
mean,
on, Al. It's Friday, baby.
rough time to start the show. middle of a serious conversation. Yeah, it's Friday. We're cooking. We're cranking. Episode number 15. It's exciting.
I think we're coming up. You confuse me. I always have the episode. I don't know. It's 17, 18, or 19 now. We're in there. We're pre-20, post-15, somewhere in there.
Episode 16. Coming at you live.
It should.
It's gonna be a good one.
It's about time that we hit stride. Okay.
High time.
It's
high time.
It's hard to take a break and get back into the swing, but that's what we're gonna do, and we're gonna keep it coming, and we're just gonna move forward and have just a great show. So, the one thing that you can depend on from us when we're recording our show is that we will start the show with the segment that we like to call "What's Your Rate?" It's the most top of mind thing. I don't think it's the most important part, but people want to know their interest rates. They want to know what our interest rates are. It's the way that we can be competitive. What's your rate?
What's your rate?
And there's always stuff going on that we can report on.
Yeah.
So really quickly, sometimes we can be long-winded and boring when it comes to this stuff. So really quickly, last
week
one
of us can.
There was some.
The other one's a little bit more lively and excited, and one of us is boring and numbers driven. Reports.
Yeah, nice. Yeah, we'll let the viewers decide. We'll let viewer decide who which is which. So last week we touched on it. Big numbers came out, CPI, PPI, big reports, inflation numbers came out, and it was like, not the best. It wasn't moving in the right direction. So this week, this guy, Chris Waller, spoke. He's one of the Fed chairs. I forget where he's from, but he spoke, and he more or less said, we're going to pump the brakes a little bit. You know, he what's that phrase, Al, about cornflakes? We're all excited, and he came along, and what did he do?
He shit in our cornflakes.
Uh-huh. Yeah,
right.
Exactly.
He pissed in our cornflakes. He pissed in our cornflakes.
So
he did something to our cornflakes.
Yeah. So Fed I don't know, leader or whatever, chair, whatever, not chair, but board member spoke and kind of said, pump the brakes. We're going to lower rates in 2024. That's still a projection, but we don't know when. So that pushed the timeline out.
Mm-hmm.
So everybody's a hair trigger. Lenders are hair triggers. The bond market's a hair trigger. So what did that do? So what did you see this week for the bond market and rates, Al?
Yeah, I mean, bond pushed up, right? We're over 4 again. We crept down under 4, and we were looking good, and then it hovered around 4, and now here we are. Let me see. Yeah, I mean, it's kind of climbed up over the past week. We're seeing one of these again, which is not we want to be here, but we're here. Right, if that makes sense. This is the arrow. This is the tip of the arrow, tip of the spear, if you will.
The trend.
So not where we want to be. Rates have come up a little bit. Look, it sucks. Okay, it's not a good thing, right? It's not a good thing. It's a bad thing. It's not the end of the world. They're still going to come back down, right? We have a lot of room for positivity and growth and happiness, right? But when the T-bill's down, right, and Nick Saban retires, and everybody's transferring out.
God.
Right? It's been tough. It's been a tough week. This has been really hard. You're losing 5 stars here and there. You're losing 4 stars. And it's difficult. And then you're like, oh, my God, it's over. He's retired. And you get past it. And then you wake up, and it's like somebody ripped the Band-Aid off the open wound again. You know what I mean? Because another guy transferred out. And then you lose recruits down the line. But it's fine. Everything's going to be fine. So I think what I'm trying to get at is that rates are going to come down in the future at some point. We just got to hang tight. Everything's going to work out. It always does.
I was wondering why you were kind of in a funk, and that just explains it. The 18-year-olds who happen to wear the laundry that you prefer are moving to other schools because the coach retired.
Yeah, it's devastating. I mean, freshman All-Americans, right? Kids, been tracking their recruitment since they were sophomores in high school. And when I say it out loud, yeah, it feels a little weird. It seems a little creepy. Right? But it's exciting, right? Because I love that. I love tracking the recruitment. But yeah, some 18-year-old kid made a bad decision, and now I'm yelling at my wife and kid. So here we are. I'm lying
Right,
about
and
kid stuff. I don't really yell at my wife and kid about that. I just sit in the corner by myself and ask them not to speak to me. But rates are coming down, right? Well, they're going up right now, but they will come down.
It's pretty evident that the Fed is gonna cut their rate. It's just the bond market's ticked up just a little bit, and I'm still locking interest rates in the sixes, so
Sure.
It's still positive.
Price out of VA cash out yesterday at 700 FICO score, pretty high loan amount, 750 loan amount, something like that. And price set at a 5 3/4, 5.75, right? Costing a point. So it's out there. Those opportunities are there for those types of programs. It depends on the type of program that it is. This was a cash out VA refinance. You're going to have a lower rate on a VA loan like that. So, it's not like anybody in any situation is going to end up in the sevens or with an 8% interest rate. So I think it all comes back to have the conversation, right? See where you'll end up being. But, rates are kind of on a spectrum. So when somebody says, what's your interest rate? What's my interest rate? It depends on the kind of loan. There's so many factors that go into that. Stop bothering me with stupid questions. Respectfully.
Of course, respectfully.
Naturally.
We might need a segment to just Al rants, and I just sit here and listen.
Called teapot. Just blowing off steam.
All right. I think we did a good job of wringing the freaking rag dry with the what's your rate this week. So let's move on. Rates the downward trend was stunted, and they ticked up slightly, but they're not on the rise. They're not crazy high. They are still better than they were when it was bad.
Sure.
So we'll leave it at that.
Yeah.
All right. Next segment.
Alabama's going to be fine, too. They made great coaching hires. So.
Yeah, right. And I'm wearing my crimson hat for you.
Package that together. I appreciate that crap. I'm wearing black, obviously. Because
I know.
Blue.
Yeah. So anyway, this is not an Alabama hat, but we'll leave it at that. All right. So next segment is what's our next segment
now? Facts and queries.
FAQs.
Frequently
asked questions. So a lot of this segment's going to be where we're going to get sometimes into the nitty gritty of the process. Maybe get a little technical. Maybe lose a couple people here. But if you're in the market, if you're in the business, it's good information to have, and it's good for us to talk about to stay fresh. So when you're buying a house, when you have a mortgage, a question that comes up a lot is, what's an escrow account? I hear this word thrown around all the time, escrow account. It's an escrow. Put it in escrow. Am I paying in escrow? Is it coming out of escrow? What's going on with escrow? What's escrow?
Why is all this money going in escrow? Why am I paying in my escrow monthly, right? What's an escrow shortage? What's an escrow overage, right? Who is escrow?
We can go deep, or we can keep it kind of high level. So in the sake of trying to be watchable, we're going to keep it as high level as possible. So when you have a mortgage, 99% of the time nowadays, you're going to pay, your mortgage payment is going to be made up of your principal and interest. Excuse me. Oh, man. All right. Let's take it from the top. 99% of the time, 99% of the time when you have a mortgage, you're going to pay your principal and interest, which goes to pay back your loan to the bank, and then you're going to pay your taxes and insurance. You're going to pay the taxes and insurance portion of your payment into an escrow account. So you pay your $2,500 a month total mortgage payment. And then your lender is going to break that up between principal and interest and escrow.
Yeah.
So what goes into escrow, Al?
Usually it's going to be your taxes. It's always going to be your property taxes and your homeowner's insurance, right? Property taxes and your homeowner's insurance. And then, on your statement, it'll break it down into principal. It'll show principal and interest. And sometimes if you have an FHA or conventional loan, mortgage insurance will be included in that escrow as well. Different banks have different statements, and a lot of times it'll actually show the disbursement of that mortgage insurance, X amount going out of the escrow account every month to pay for your mortgage insurance. So, but to keep things simple, right? Your property taxes and your homeowner's insurance. And, basically what you do is you take your property taxes for the year, right? Now, sometimes those are paid semi-annually, twice a year. Sometimes they're paid quarterly, but what's done basically is you take the amount for the year, right? And if, give me a number, let's say 6,000, right? So that's going to be $300 a month if we break that down over 12 months. Is that right? Am I mathing that out right? Oh my God, we do this for a living.
If your taxes are $6,000 a year, your 1/12 of that is going to be $500 a month, and nobody expects you.
That's what I meant to say. $500. So
nobody expects anybody to know that off the top of their head. But the fact of the matter is, your taxes, whether they're paid quarterly, semi-annually, or annually, you're paying them into your escrow account every single month. So you're paying 1/12 of that payment every month. Mm-hmm. You don't have to worry about it. You set it, you forget it, and then when it comes time for the tax collector to get paid, that money's already sitting in your escrow account because you've accumulated it over the year of paying. Yep. It's already sitting there, and then the lender disperses to the tax collector. You get a statement that shows you what your tax bill was. You get a statement from your lender saying it was paid. You're all good. Your payment that you make every month is going to stay the same throughout the year, and your taxes and insurance are going to get dispersed when they come due. You don't have to worry about it. Now, it's helpful because it's just some people find it better and more manageable to pay $500 a month into escrow rather than, our tax bill's due. We got to get $6,000 together. Or
most people don't
have homeowner's insurance
laying around just to pay for that, right? Or your homeowner's insurance, $1,500 just laying around to send that out. So those two numbers are broken down into 12 months, divided by 12, right? And added to your monthly mortgage payment. And that's the escrow portion of your payment, right? Mm-hmm. 1 month of the taxes and 1 month of the insurance. Now they pad that, right? So when you do a mortgage, they're going to pad that with a couple of months, just in the event, right, that your property taxes go up or your homeowner's insurance goes up. So you have a little bit extra in there to account for that, right? So
and then
go ahead.
I was just going to say at the end of the year, if they didn't go up and you have an overage, you'll get a check back. And if it did go up, then hopefully you're covered and you're not coming out of pocket. There's a whole slew of people throughout that are involved in the process that make sure that these things are as accurate as possible.
Yeah. So, but obviously it's not definitive. It's not definite, right? Taxes, especially right now in a time when values are climbing, and what we're going to see, what we've seen, back in 2020, 2021, and I think what we're going to see over the next year or so, when values, climb at a pretty quick rate, you see property taxes go up, right? Because the tax assessed value of that property goes up. And so what you're going to see is that your escrow payment will be higher, right? And people always reach out like, whoa, you guys messed up. Call you, a year down the line, you guys messed up my escrows. It's like, no. Your taxes went up. As I said in a previous show, homeowners insurance as an average has gone up about 21% over the past year, right? Your property taxes have gone up. Your homeowners insurance has gone up. So that escrow portion of the payment has to go up to account for that. Right now, what'll happen is if they don't have enough money in your account, right, to pay, let's say your property tax bill comes due and they don't have enough because the taxes went up, right, and they were accounting to pay a certain amount, right, and that amount went up because your tax amount went up. If there's not enough in your escrow account, then the mortgage company will foot the bill for you, right? And then your payment will increase. The escrow portion of your payment will increase to cover the shortage that you had, right? The amount that you owe the mortgage company for paying your taxes for you, right? So you'll account for that. In addition to, it also has to go up for the next installment, so they have enough to pay your property taxes the next time that they're due. So it's a little bit of a payment shock. People will say my payment went up by $200. My monthly escrow went up by $200. It's like, yeah, well, you had a shortage, so now you got to pay back the shortage, and then you also have to make sure you have enough so you don't have a shortage in the future, right? And then once you get caught up, usually that amount will come back down a little bit, but you'll get, every mortgage company does what's called an escrow analysis. You'll get that analysis in the mail, and it'll give you an idea of where your taxes are, if they went up, if they went down, why your escrows are going up. So a lot of those things folks just throw away. It's the mortgage stuff comes out automatically. I don't need to worry about it. And then 3 months later, you see that, oh my God, the last few months, my payment's gone up so much. I have no idea why. Well, you got to look at that piece of paper, right? You got to look at that escrow analysis. So definitely something to keep in mind.
If this seems like a lot, it can be a lot. So just lean on us. Just lean on us. We'll figure it out for you.
Lean in. Here's the thing. If you don't lean in, how bad could this be, Ab? How bad could this be?
I mean, I don't want to go down that path. Maybe we could talk about how good it would be if you lean in and you understand your escrow account. You're prepared for an escrow overage or shortage. Big words, big crazy stuff. Escrow shortage. Yeah. Well, if you're prepared, you're the type of person who really it comes down to providing for your family. You be a type of person that is a rock for your family. And if you want to be that rock, that steadfast, once more into the breach, my men. If you want to be that kind of person, it really starts with the escrow account.
It does.
You got to understand the escrow account if you want to be able to lead your family through this crazy life, especially in these times. Post-COVID preparedness really starts with the escrow account. It's a foundation.
It's a building block. I was just going to say that. Beautiful point. Great point. It's a building block for a good home, right? For a good home, right. For a good upbringing. Now, on the flip side of that, if you don't pay attention to your escrows and you get one of these jumps in your mortgage payment, you didn't realize it until months down the line, and we're at a point where you're like, we're going to go out to dinner and we're going to eat big these next couple of weeks. And then all of a sudden your account's depleted because you weren't paying attention. Your escrows just sucking money out of your account. And now your hot water heater goes up, right? You got no hot water heater, you got no hot water, you got no money to fix it, right? The bills are piling up. Right, you take out a credit card, but you can't pay off the credit card because you got no money because your escrows went up and you didn't know about it and you didn't budget for it. Right now, you're getting in trouble with the wife and the family, and you got a toxic environment, and the kids hate you because you and your wife are constantly arguing. At some point, you're going to have to move out, or she's going to have to move out. And what about when the kids go to graduation? Right? You think you're going to show up and you're going to be proud, and they're going to be proud to see you out there, huh? All because you let it go on an escrow account? Come on, just do yourself a favor. Take a little bit of knowledge, read the escrow statement, read the escrow analysis so that doesn't happen. We want you in the best of care.
Again, or just lean on us. Lean on us. If you lean on us, if you follow the show, if you watch the show, if you listen to the show weekly, and then you lean on us, questions come up with your mortgage, and you call us, you'll avoid all of that hardship that could be involved with your escrow account. So let's keep it to sunshine and rainbows. Let's keep everybody happy. And look, you talk about the wife getting mad at you. You want to be the kind of guy who knows, my escrow went up the day it happens. That's a prepared guy. That's a guy who's going to be able to be there for himself and his family. So
don't order the thing. Don't order the thing on Amazon. No new outfits this month. Escrow account went up. You know what I mean? We need to budget accordingly.
We're gonna hang tight until Dad figures out this escrow thing. Your assets are frozen until I figure. And listen to me. I'm gonna call up my buddies Adam and Al, and I'm gonna figure this thing out. We're gonna get to the bottom of this. We're gonna get straightened out, and then we're gonna move forward with our lives because we have some advocates in our corner. And in this world, whether it's mortgage, medical, schooling, anything, you need an advocate.
And
that's what we can be for you. An
Absolutely.
escrow advocate.
Escrow advocate, right? If you need a furniture advocate, you talk to Patsy down at North Furnishings, right? If you need a bagel advocate, you talk to D. Paola up at the bagel shop, right? If you need a health insurance advocate, you talk with Mikey Bones, right? Old Mikey Carlson, right? Need mortgage, talk to Ab and Al, right? We got you covered. It's like a whole thing we got, right? We got a thing.
Yeah, yeah. We got a thing. Yeah, we got a thing. We got a good thing.
We got a thing.
So, all right, let's move the hell on off escrow accounts and let's get into hot takes. So, Al, my hot take this week, and it just came to me, but my hot take this week is you're not going to understand everything. This is our full-time job. We take it very serious. We've both been doing it for a long time. You've got to trust people. So whether you're shopping for a mortgage or you're, going to get your oil changed, it comes down to, being smart and gathering the information you can, but it's just it's just impossible to know all the things about all the things. So when you're going to do a mortgage, you need to work with somebody you trust because there is going to be a level of uncertainty on your end as the consumer. And at some point, you just need to trust the people that you're choosing to work with because there is an infinite amount of information. We could have talked about the escrow for another 20 minutes, and the 10 minutes we talked about it was too long. You know what I mean? So my hot take is find somebody that you trust, let go a little bit because that's why we're here.
Yeah.
To be, that extension of you that's going to take care of you and look out for you and do the right thing by you, and then have the knowledge to handle and help you make the right decisions. So that's my hot take. I'll leave it at that.
Great point. Yeah, no, I love that. And I think that it's so easy, right? When you're in this process, if you're with somebody that you don't know and they give you their advice, right, or their best recommendation, it's so easy, especially nowadays, to go on the internet and search for different options or different things. And obviously folks are going to have different opinions, right? Or different banks, there's definitely bait and switching going on, or
there's people who would love there's people who would love to, throw their 2 cents in, but they don't know the full picture.
Right, exactly. Another great point. Yeah. So it alleviates the stress and the concern if you work with somebody that you know and that you trust, and you can say, hey, what's the best option here? And given all the information, we give you the best option, right? Or sometimes it'll be like, do you want A or B, right? And we'll give you enough information to make an informed decision. I think that's a great point, that you want to work with somebody that you trust, that's, that you feel is going to put you in the best position possible.
Right. And
you don't have to worry about going and searching for something else.
And that goes that, everybody has that level of, that relationship with their financial advisor. You're not going to know. That's why you hire a financial advisor. You could get on E-Trade and do all of your money managing yourself, really. But you hire somebody to do it because hey, that's what I hired you for. Figure it out. So
right.
Just the same with us. Like, what should I do? That's why you hired us for. We'll figure it out. We'll tell you. We'll help you make it a good decision. So what's your hot take, Al?
So my hot take is credit cards. Credit cards is a very big unknown, right? Everybody is like, oh, credit cards, it's so bad. And if used incorrectly, they're terrible. But they can also be extremely beneficial for building credit, right? Having a credit card and using it, paying it off every single month, right? You worry about, oh my God, the interest rate on this is so much. Well, you don't have to worry about the interest rate if you pay it off every single month, right?
That's the trick. That's the game, right?
That's the trick, right? You don't want to carry a balance on a credit card because that's when you get hit with that, 18, 20, 25, 28% interest, compounding daily interest, right? So there's not a schedule on a mortgage. We can say, hey, this is a 30-year mortgage. So for 30 years, you make this payment. At the end of 30 years, it's going to be paid off, right? It's simple interest. Every payment, the interest goes down, and the amount of interest that you pay goes down, the amount of principal that you pay goes up, right? So you're paying more principal over time, less interest, and eventually you pay the whole thing off. With credit cards, it's not like that, right? They just give you a minimum payment, which is mostly interest. And if you pay that minimum payment, on a $10,000 credit card, you'll be paying that for a hell of a lot longer than 30 years, right?
If you pay the minimum payment, you'll never pay it off.
Yeah, you'll never pay it off.
It's interest only.
It's interest only.
And which it's
So
an evil game that they play because it's
yeah,
just trickery.
it is trickery. And here's the problem. Here's the big problem that I have with it, right? So my hot take is I think it's terrible that we aren't taught about these things in high school and in college. I didn't learn about credit cards and credit card interest and the difference in simple interest and compounding daily interest until I got my first job in mortgages, right? That's when I learned about the dangers of credit card and the benefits of credit cards, right? Why aren't we taught about this at a young age so we can plan accordingly, right? When I had a credit card right out of college, my first credit card, I was making minimum payments, carrying a balance on it. I had no idea. I was like, well, if I just make this minimum payment, I don't know why it goes up every month when I'm using it. I have no idea, right? But I just keep paying this, and then it gets to a point where that minimum's a little too high, right? And I don't have enough to pay this thing off. I don't even know how I go about paying it off, right? But if I was
Yeah.
informed about this, right? If you're informed about this early on, right, and the benefits, if you pay it off every single month, if you have a credit card, a lot of folks will open up a credit card for their kids, right? Put a credit card in their kid's name,
Yeah.
puts something on it and pay it off every single month. And that way, by the time that kid gets out of college or as a young professional looking to buy a house, they have an 800 credit score. They have impeccable credit because they have a credit history from that dates all the way back, right, of paying this amount off every month. So they have impeccable credit and they're in the best position possible to kind of start the next phase of their life.
So but here's the other part of that. May I add a couple things?
Please.
All right. So as fathers, we should make a commitment to educate our children on these things because high school isn't going to and school isn't going to. And, you don't want them to fall into the same pitfalls that maybe you or I have or did. And then maybe don't open a credit card in your kid's name if you got a problem with like DraftKings. Maybe you've maxed out your cards. Your kid's social security number, and the internet told me to open a card in his name, so he has good.
I'll pay it off by the time they get older.
He's got nothing but time. You don't want your kid inheriting a 500 credit score either. So just tread lightly.
Yeah, good point, Ab. Good point.
But no, if you've got your stuff together and having them on as an authorized user is a great hack to getting their credit built so they can if you use credit wisely or use debt wisely and you are disciplined and conservative, it's a huge, great, amazing tool. There's tons of people who made their living off of that stuff.
Yeah,
we could talk about that.
Yeah,
but that's a great hot take, really good hot take. There's some depth to that hot take. You got like consumerism, schooling, just sales and then you got it's a good hot take. I love it.
We need to know more about it. We need to we should be informed about it earlier on so we can make good decisions.
Okay, so opinionated this week. For opinionated this week, I have an article that's on CBS News, okay? And I'm going to try and do an old screen share, and hopefully it's good. Let's see. Because this article kind of talks about something that we've talked about, and, hey, who are we? We're just two freaking knuckleheads, So, maybe people are not crazy about. What do you see, Al? Too much?
I see the shows. Yeah, now I see like square and 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 an infinite number of. There it is. Now I see it. Mortgage rates January. Yeah.
All right. You see this?
Mortgage applications are rising. Here's why you should act now.
So this is on CBS News, January 12th. So I guess in this world's news cycle, that's old. But still, mortgage applications are rising. Here's why you should act now. Maybe you're somebody who isn't going to be like, oh, podcasts, everything, or these mortgage guys. What do they know? Well, here's your pals at CBS News saying the same thing that we've been saying. Here's why you should act now. And then I'll give you the cliff notes here. So here's why you should act now. All right, that's what they say. Mortgage rates are slightly down. Yes, they certainly are, and I also believe that is a determining factor is whether you should act now or not if you're in the market. They are down. They could rise again due to inflation. You know what? I don't know about this one. I think inflation is probably under control and on the way down. So, but act now. They could rise. You can always refinance. Wow, CBS News is saying that. Whoa, we've been saying that for a couple of weeks, maybe months, probably our whole career. But thanks, CBS News.
Yeah, great.
And then the bottom line. We won't get into their freaking bottom line, but yeah, just wanted to kind of show mainstream media. I guess a quote trusted source, CBS News, is kind of echoing what we've been saying for months. So it's not all, we want your business now. It's an obvious opinion, and it's an obvious take if you're in the market to buy. If you're in a house that you love and you've got a 2.5% interest rate, just listen to us for our little anecdotes and fun flavors.
Yeah. Yeah, that's great. Maybe
expand your palate.
Make you laugh, make you cry, somewhere in between. Sprinkle in a little bit of knowledge for you, right? You walk away better than you came in.
But if you're a realtor or you're a loan officer or you are in the market to buy, maybe consider the fact that we might have good advice and watch our show for those reasons too. I'm not saying CBS News knows what the hell they're talking about, but it's just another source echoing what a lot of us in the industry have been saying.
Yeah.
Action now can be better than, stagnation and waiting.
Yeah.
So.
Yeah, because what are you waiting for? You got to have a point, right, at which you're going to pull the trigger. Otherwise, you're going to be waiting forever. The rates are never going to be low enough. Then it's going to be too competitive, and you don't want to pay above market. And then the values are going to be too high. And then, oh my God, it's going to be a recession. I mean, there's always a reason to wait, right? But sometimes you just got to act because there's still, you can still put yourself in a good position down the line, right? Even if it's not the best position, the position you wanted to be in now, at least you're in the house. And then there's things that you could do financially, there's things that you could do in the future to put yourself in, a little bit better position, right? But you can always find a reason to wait. That's a great opinionated. That was a great article. And here's my opinion about that is that you found this fantastic article, right? And then you peruse through it and you hit all the bold things. And I think you did a great job of highlighting all that. And then I think that you didn't want to read the bottom line or you didn't want to do the bottom line because you didn't read the bottom line. Right. So you just avoided it altogether and you just said, I don't need to read it. I don't need to go over the bottom line. Blah, blah, blah. But I just don't think you read it. So that was your way of breezing through it. Right. That's my opinion. What are you doing?
You know what? I was going to look back up the article and read the bottom line. I didn't read it, but I also didn't read it live because
no, you clip notes every other bowl section.
Get out of my head. Get out of my head, freaking Sigmund Freud.
You didn't clip notes the bottom line because you didn't read the bottom line. Maybe didn't even read the whole article, just interpreted what the article was saying based off of the subject.
I think more my point, and this could be up for determination, but more my point was, hey, look, here's a mainstream media outlet that is saying kind of the same stuff that we've been saying.
Yeah, it's the truth. And then we've been saying for a while because people can say, well, you're just saying it because they said it. But we've been saying it for months, right? We have proof of that. We have a track record. We have history recorded.
Yeah.
Right?
And look, I don't like the mainstream media. I think they're full, 9 times out of 10, they're just clickbait or whatever.
Mm-hmm.
But, you have a good thing. You have a good opinionated. You think you're going to wrap the show up on a high note, and then you just make me feel bad.
There's something I'm curious about. Why?
I don't know if we have time to get into that. Let's wrap up the show. What do you got?
No. I'm not doing it. I'll save it for another time.
Save it. Holster it.
Save it.
And you know what? it's a pretty good practice to do that, because if you don't remember what you're going to say in a day or a week or whatever, it probably wasn't worth it.
I'm going to write it down so I remember.
Yeah.
There's no way I'm letting this one go. Whether it's good or bad, and we're going to make a clip out of it, and it's going to be something. It's going to be a good one.
All right, great. You let me know. What you remind me next time we're on here, what you wrote down. You should write it down. You should write it down. Write it on your hand.
I'm going to write it down. I don't even have a sticky note. I got to find a sticky note.
Well, good luck remembering it until you find a sticky note. That's what you get for coming at my opinionated. All right? We're wrapping the show up.
That's the bottom line.
That's the bottom line. Hey, thanks for watching the show. It's been fun. I can't wait to continue to put these out.
Yeah, good times.
Hey, you're going to get a look at us.
Mm-hmm. If nothing else. And that's the bottom line.
All right, Al. Good show, man. My parents are in town. They're waiting for me to go to lunch.
All right, until next time, amigo. I got snow outside. I can go outside and play with my kid.
All right, later.